Hey there, everybody. Thomas Wood with valuecharts.com. It is Tuesday, March 10th. We're going to take a look at some of the setups we had in the trading room today in crude oil, some intraday trendline breaks. Now, this is a setup that occurs all the time in crude oil and in a lot of other markets, but crude oil is one we do it the most on, I would say. And one of the things we look at is a tick chart. So we're using a 500 tick chart in this case. And then we look for intraday trend lines against the trend. Okay, so if the trend is overall in a downtrend, then we look for uptrend lines going across lows. So we look for a series of higher lows and then draw a trend line. And today we had two different setups, so we said we're good for taking shorts. And that was this one right here. And that would have been selling right over at 49.58 on the break of this uptrend line going across this low and this low here, and then hitting here and then breaking through and running. And that sold off from 49.58, and then we were covering right down here at about 49.25. And then what we were looking for is the next trade. We waited and waited and waited, and we had a nice uptrend going right here. We had higher highs, higher lows within the context of an overall downtrend. You draw a trend line going across the lows here, and then your entry would have been right at about 49.44. Looking for the sell-off, we said the first target was 25. Okay, we said 49.25 was the first target that you could cover right here on top of the support, and then wait to re-enter as soon as it broke the support. While a lot of people covered right on top, it bounced off of it by about 20 ticks, bounced about 20 ticks up off that support, then reversed back down, broke through, which would have been your re-entry short again at about 49.23. Ended up selling off very nicely all the way down, and so far we've hit a low of, the low was 48.30, and we were saying time tick profits on this right over here at about 48.50. So you're talking a trade from 49.40 down to 48.50, about $900 a contract. Not a bad trade at all. Worked out really well in our favor. And again, all these are with about $150 to $200 a contract risk. So you're getting 8-9 to 1 reward risk ratio on these types of trades. So great job for everyone in the trade room that did that. And again, this is just one of the markets you can watch for this type of setup, and it happens all the time. There's another one right here. Trendline break, retest, then continue on. Or if you did not adjust your trend line, you could have drawn a trend line there, retest, and then continue on. Worked out really well. So make sure you keep an eye out for those intraday trend lines. They also work on 240-minute time frames really, really well for crude oil especially, and for gold. So that's all I have for you for today. Don't forget, you can follow us on Twitter and Stock Twits at Trades with Tom, at Value Charts, or at Trades with Dave. Don't forget, we have a workshop coming up here at the end of March with Mark Helwig. It's going to be talking about using cycle surge setups. Really cool setup, really cool indicator. So that's all I have for you for today, and until next time, happy trading.